Hello, this is Mike Swanson. Welcome to this live stock market session. I had some trouble setting up the video and getting it to work. You may have noticed that, but it seems to be working now. It took me a couple minutes to get it hopping. We got 6 people that are joining. I'm kind of doing this on the spur of the moment. Plan on talking about this trading forum this week. But first, let's talk about what's going on in the stock market. I want to show you the stock that's got, or the chart that has most of my attention at the moment. In that's this one. This is the TLT exchange traded fund. And as you can see from it, we've had a big bounce in October. It's gone up to the 150-day moving average. The green line is the 200-day moving average. This is the biggest rally, the TLT bond ETF that tracks the 20-year Treasury bond now all year. This is, in fact, the first time that this exchange traded fund has gotten overbought when you measured it by the RSI indicator at the top. The last time was July, around July, August 2021. So that's a long time ago. And bonds had a tremendous decline this year, obviously, in the stock market. In fact, this bond fund, this bond ETF fell more than the S&P 500 did in October. Not as much as the NASDAQ, but more than the S&P 500. This has been devastating for most American stock market investors who do the 60-40 portfolio allocation, because since 1980, whenever the stock market had a bear market, bonds would go up. The value of bond funds would therefore go up and help, cushion the losses made in the stock accounts. And every year you could do a rebalance, and that was a great strategy, just by rebalancing those two things. Well, this year that strategy has turned into disaster. Now, what a lot of the advisors who promote the strategy never say, or don't even know, is that if you look before 1980, it wasn't a good strategy in the 1970s. Since 1980, it's incredible, or up until now, but before 1980, it wasn't the greatest thing in the world either. But that said, this year's performance of the 60-40 portfolio, again, 60% stocks, 40% bonds, was even worse than any of the years of the 1970s. But here we are, a relief rally, and people have been averaging down all year into stock market funds. Now, I'm not talking about the Robinhood trader who mostly they've blown themselves out. I'm talking about the regular person with the 401ks or just a regular brokerage account who's not trying to day trade. They're not trying to do risky things, but they have been averaging down fairly consistently. That's what stories that use data suggest. And there have been several days in the past 2 months that had the biggest buying in these bond ETFs than ever. So I think this rally has been driven by people averaging down, trying to chase more, just keep buying, and not really any meaningful forecast of what the future is. That's why, there's basically, as I wrote in a post a few days ago, the Bulls got the Super Bulls, like Kathy Wood. They have an argument that, inflation's going to go back down to 2% in the second half of next year, and that's why bonds are going up. That's why the stock market's going up, and the pivot's going to basically create a nirvana situation. But these same people were saying this sort of thing in June, July, and August, and in March, and in last year, and they've been wrong all those times. And they've been wrong about bonds being, this is in my view, this is just a bear market rally. Now, the other argument for the bond rally is that the bond curve is inverted and we're going to have a recession. I don't know, I don't know. But regardless, I think this is a bear market rally in bonds. And now we're the most overbought we've been in a year and a half. So I think the upside is very limited. And I took a position, a small position, mind you, in the TBT ETF, which tends to trade opposite of TLT. TBT tends to go up when TLT goes down. It's a ETF designed to short treasury bonds. So while TLT, basically I'm taking a position here with a mental stop loss of say 26. But look, this isn't likely to just shoot straight up. I would look for it to go sideways, perhaps for the rest of this year. These bond ETFs tend to move very slowly. And, the Federal Reserve itself is saying they don't want to lower interest rates, like all these bulls are saying. They're saying they basically want to get rates up to 5. Perhaps they'll say 5.25 next week when they meet, and stay there and pause. And the reason they want to pause is they want to defeat inflation. It's still extremely high. You saw that today, if you're paying attention to the news, in the producer price index news, which came in hotter than expected. And we're nowhere near 2%. We're not even at 5%. So I think with the Fed at the same time is worried about hiking too much and causing the economy just to fall apart, because then they'd be forced to lower rates when they don't want to. They want to defeat inflation first before they lower rates. And I think that's going to be the message next week at the meeting, because this was a message that Jerome Powell gave 2 weeks ago, and it was in several Wall Street Journal articles, I think this Sunday, and I'll probably quote some of them in a blog post maybe next week to make sure people pay more attention to it, because frankly they're not. They're just watching these bull gurus, looking at them on Twitter, and hearing the predictions that the stock market's going to go up, or they want to chase meme stocks still. Tesla the other day was still the #1 most traded stock. People got in their minds that this is still, that are actively still trading the markets, that haven't been blown out, that this is still 2020 and they can just keep doing these things, or it's going to return to the way it was. And I just don't think that's going to happen. I think the way to navigate the markets is think in multiple time frames. On this time frame, on this chart, I'm looking at the daily trends, the daily price action trends. And as you can, this is RSI and TBT hitting below 30 the other day, showing that it's also the most oversold that it's been in a year and a half. So these are this is an oversold reading. It hit the 200-day moving average, and that's why I'm taking it as an entry point, looking at the daily charts. But in my view, the daily charts give me entry points, but I want to align those entry points with longer term secular trends. And when I think about that, I want charts that aren't just a year old, but go back 20 years or as long as you can. And when I do that, what I see is that this bond fund made an all-time high, I believe a high we'll never see again, in 2020. Then the reason I say that is because These bond funds trade opposite to interest rates. And when interest rates went to zero, the Federal Reserve took them down to zero in 2020. That's the lowest in our lifetime. And I believe it's the lowest it'll ever be in our lifetime, because it's just about the lowest in human history when it comes to the US. It is the lowest in the history of the US Treasury bond market. And then after that happened, what happened? Well, last year inflation started to pick up. And now, it's over 10% in much of the world. It's a little bit lower, right below 9 in the last CPI annualized reading. But, yields are not going back down to zero when inflation around the world's 10% and around 9% in the United States. We're in a completely different macro environment than we were in 2020. And that is the secular trend when it comes to interest rates and bonds. Bonds trade opposite the interest rates in yields. So when I see rallies in the bond market, to me, that's an opportunity to sell bond funds or bet against them. And that's what I'm doing this morning with that TBT ETF. Again, it's a small trade, but as things stand now, it's the only short fund I own in my main account and in my IRA. I may add on more short funds at some point. I'm not thinking I will till next year, but I look at things, week by week, sometimes day by day. And this RSI above 70 is what got me to take this position. That it's probably going to take a couple weeks to really start to roll over or to drop. But that's the tough thing about taking short positions. You have to short rallies, then put a stop loss order, above below your entry point. It's just a different game, and it's a tough game. Shorting is not fun. There's more money made going long, and I'm much more long than I am short. As I said in a post earlier this week, I own gold ETFs, the CEE, Central Fund of Canada ETF, which owns both gold and silver. I own a bunch of European and world ETFs and mining stocks and material stocks. So this is just one little position I'm taking to, just a small hedge. It's not even a 10% position in my account. So that's what I'm looking at today in the markets. Really, this has kind of been a quiet week. I'm not surprised at that. The end of the year, or from now to the end of the year, tends to be quiet in the markets and in the financial world in general. I know historically, I've been doing this since the 90s, that the traffic on the financial websites tends to really die out towards the end of the year. Trading volumes tend to really thin out. In fact, sometimes there's trends of traders trying to do thinly traded stocks that have declined the most all year and trying to play them for trades. So there's lots of quiet action. That's one reason that I kind of decided to launch this trading forum now, as we're in a quiet time in the markets, instead of doing it getting flooded. I wanted to, I knew there'd be some issues of people losing their password or not being able to get into the group, and I'd be able to take care of that. And some reason I don't understand why. There's a chat box with the live video here, and on one screen it's telling me it's not working, but I just typed, I don't know if it's working or not. I typed okay on one screen and it's not showing up on my main screen. So I don't know if I know that's a YouTube glitch. I don't know why the chat doesn't seem to be working here. I was expecting to be able to answer questions here, but I'm not sure if I'm going to be able to. This is the first time I've used this live video thing for quite some time. So, if I continue to keep, fix this better, hopefully I'll implement live phone calls where we can talk that way with one another. But again, I'm just getting this stuff going. Just got the forum going this week. Put your questions in the forum on the website, and I'll be able to answer them there too. And more people will also see them at that place, and we can continue the conversation over the next couple of days, over the weekend. Make posts of your own. I'm really trying to build a community here, and it's going to take some time, but it's really just kind of like a beta test right now. And I expect it to really start to grow after New Year's. And one of the things I'm really wanting to do with this is make a focus on educating people, educational type of content, lessons, instead of just someone like everywhere else talking all these predictions and picks. Those are fun. You get a good one, you can make money, but in the long run, you need a strategy, and you need to understand what is moving these markets, how to understand trends, how to understand when they're changing, how to manage your money, and these are all topics that are drowned out in what has become the financial media. And when I say financial media, I'm talking about not just talking about CNBC. I'm talking about what you see on Twitter, what you see on YouTube. It's all been taken over by hype. And this hype began to explode in 2015, 2016, as social media began to dominate the internet. And people advertise more and more on social media, where the hype and the click or trying to get people to instantly react is what the algorithms give you a benefit for. That's what the ads push more and more, because the ads push these sites push the ads that get the most clicks. If you don't get a lot of clicks, your ad isn't shown. So people have got to hype. And education is not hype. It's 99% of the people want the hype, and that's what therefore drowns everything out. But my goal is to try to create a space where we can focus on education and longer term trends and things that I think can really help people do better in the markets. I'm not expecting to get thousands of followers by doing that, but if I can help 100 people, then it's worthwhile, because those 100 people, they stay. It's not a flash in the pan situation. And millions of people, like 20 million people, got on Robinhood after 2020, and almost all of them now have dormant accounts because they wiped out. I've been doing this since 1999. I will be around longer than the Robinhood app will be around. That's what I got to say about them. They'll go, they'll get bought out by another company. They'll go bankrupt. They'll go under. Look at these crypto gurus fading away. This is the flash in the pan people. And that's just the way it is in these markets. So I just wanted to talk with you today about, what's going on in the bond market. How's that going to influence the stock market? I still am hopeful that the stock market can continue to be okay and sideways to up from now into New Year's, hopefully into the first quarter, even if the bond market does falter here. But it may take more than, just because it's overbought, it can stay overbought too. It may take longer before it really rolls over. So, in one sense, it's just overbought now. It's not starting a new downtrend yet. But that's the tricky thing about shorting. You just got to hold your nose and take a position to get a position, because if you short when things are dropping really hard, you get squeezed out. And that's why it's so hard to short even in a bear market. And you really got to do it with small positions. You can't take giant positions trying to be a short seller. It's just the way it is. you could take much bigger positions going long because you can get better entry points and the rewards are much better. You get long in the right stock, you can double your money or triple your money. The best stock I bought in 2020 was Mosaic, and it went up 3 times what I paid. Exxon, I think, did the same. You can't really predict which stock's going to go up the most. So I like to buy a basket of stocks when I buy them, and then you get pleasantly surprised. But when you short, you don't get positions doubling and tripling in value. You're looking for 10, 20, 30% returns, and it's really more of a hedge against long positions. That's what I really think of short selling as being most useful for at this point. So been talking with you for about 20 minutes. If you got any questions, again, put them in the forum in the website underneath this video, and I'll try to answer them, and be talking with you later.